Our next speaker is Dan Thomas, Managing Director of Hammer Metals. I might just pause to say that all those years ago, Hammer Metals was the very first Bulls and Bears client. So I'm delighted to be introducing Hammer Metals. I'm not sure that they knew at the time we didn't have any other clients, but since then we've managed to secure quite a number. So Dan, great to see you here tonight. By way of background, Dan's got about 20 years of experience in operations, corporate development, project management, project finance, and mergers and acquisitions across the resources sector. He's worked across Australia and internationally in a wide range of commodities, including base and precious metals. He also held positions with Wesfarmers, PTT Asia Pacific Mining, and Mitsui E&P Australia. Ladies and gentlemen, the Managing Director of Hammer Metals. Thanks, Dan.
Thanks, Matt. Thanks to the JP Equities team and the sponsors for this evening. It's fantastic to be here talking about Hammer Metals in what is really a strong copper price environment. And I think at the moment what we're seeing is obviously some supply disruptions around the world with COVID. But when we pause to look at future metals, and we're here to talk about future metals, what does the world look like for copper moving forward? You have a look at some of the analyst projections, and the projections for the next 25 years, copper demand will equal the entire consumption in human history to this point in time. So when you start thinking, what does that look like for future metals and the copper price, I think it's pretty strong going forward. You have a look at global average grades of copper reserves around the world, they're below less than 0.5%. So when you start looking for projects around the world and you look at projects in a portfolio, I think what we have at Hammer Metals, which is 400,000 tonnes of copper equivalent metal at sort of 1.3% copper, these are the types of projects into the future that I think get developed. So in terms of what we're trying to do, we're trying to build copper inventory in Mount Isa, a prolific base metal province. And as I said, we've got a great head start there with 400,000 tonnes of copper equivalent metal. We've got two projects, one in Mount Isa, the other one here is in the Yandal belt, some 300 square kilometres in the prime Yandal gold belt. The focus for us at the moment is very much in Mount Isa. We've got a team working with a company that has made world-class mineral discoveries before, Russell Davis and Ziggy Libanecki with the Goldyer Gruyere deposit, 6.5 million ounces. The team has experience in taking a junior company through that development life cycle. We're surrounded by tier 1 deposits, both in Mount Isa and the Yandal belt. And I think there's two better commodities at the moment to be exploring for than copper and gold. In terms of the company, current market capitalisation of about $80 million. We have $11.2 million in funding in bank, having just completed a raise and a share purchase plan. The directors own 13% of the company, and each round of funding that we've done, the directors have contributed to the raisings. So not only do they provide technical advice, but they're financially aligned with what the company is trying to achieve. In terms of our tenure, we sit in between Mount Isa and Cloncurry. As I mentioned, a lot of tier 1 deposits around us. The Mount Isa mine, George Fisher, owned by Glencore, Ernest Henry, large-scale iron oxide copper gold project, Cannington down to the southeast. And for a junior company, what we've really been able to do is amass some 2,200 square kilometres of tenure in one of the prime mineral districts. There's not many juniors out there with this sort of land holding in such a prolific base metal province. And we've got a fantastic start because we've got 400,000 tonne of copper equivalent metal in a JORC resource already. Not only that, we've got a recent copper discovery as part of our JOGMEC joint venture. So the areas you can see there in the dark blue, we're in a joint venture with JOGMEC. JOGMEC are earning a 60% interest in those areas by spending $6 million. And in January this year, we announced a discovery at the Trafalgar deposit. The Trafalgar deposit I'll talk a little bit more about in a moment. In terms of our portfolio there, we've got 4 JORC resources within 25 kilometres of the highway that runs between Mount Isa and Cloncurry. So all of a sudden, when you're that close to infrastructure, you're building a portfolio of copper and gold assets. The story around getting a development up off the ground is, I think, pretty good. What we need to be doing is adding metal inventory, making new discoveries, adding to the projects that we already have. With $11 million in the bank, we can start to look to do that. In terms of the discovery, we're 4 holes into the Trafalgar Discovery, stretching for about 200 metres of strike length, down around 100 metres. It's still open to the north and the south at depth, to the east and the west. We're back there drilling as part of our joint venture at the moment, so I expect results from that to be coming out in the next 4 to 6 weeks. It's part of a broader exploration program we're carrying on in Mount Isa. So not only are we doing work on the joint venture, we're also drilling our 100% owned prospects. And in terms of the leverage, making a similar style discovery to what we made at Trafalgar on our own project is where that opportunity is really at. And I think we're drilling some good targets at the moment. So here's a little video we'll go through this. And this is a 4.5 kilometre trend along Trafalgar. And what you can see here is a number of the old workings from where these deposits were mined pre-World War I. So Trafalgar itself were mined before World War I. This whole trend, 4.5 kilometres, has got 2 drill holes in it before we did any drilling here this year. So you can see the shafts just at the bottom here. We're going to fly over the Trafalgar deposit in a second, which I said was mined in the early 1900s, but unexplored until now for a variety of reasons. We've got 4 holes in there, drilling more at the moment. This trend continues for about 4.5 kilometres. We'll have a look in a second at the magnetics. The magnetics line up. Just on this little ridge coming up now, you'll see some old costines, some old workings, some old pits. This area hasn't been explored, and this is where we're looking to add metal inventory to what we've already got in Mount Isa. We'll pull up at a couple of shafts here. For pre-World War I, these shafts went down to about 70 metres of depth. They're pretty skinny. I wouldn't fit down them today, but the old timers were pulling out really high-grade ore. They stopped mining these things when the grade dropped below 10%. So these are the types of areas we're exploring now, looking to add tonnes. In terms of the trend and what you can see there, the bottom left, you can see the bright red, the 4.5 elongated stretch. That's the magnetics for the area. And when we've drilled and we've seen copper mineralisation, we've seen it occur with magnetite. So pretty good marker for the geology of what you're seeing. And you can see all the little white dots on there for that 4.5 kilometre stretch. They're the old workings or the old shafts that were sitting there. So that stretch, 2 drill holes in it, the Trafalgar Discovery, and that's an area now that the joint venture is pretty excited about getting back to exploring and drilling out. In terms of the overall position, that's within the JOGMEC joint venture, and you can see on the right-hand side there, the blue boundary pretty much depicts where the JOGMEC joint venture is. To the north, 100% hammer ground. To the west, 100% hammer ground. You can see those magnetic trends run right up into our own prospects there. So as part of that drilling program, just to the north, you can see a prospect Lakeview. We're drilling there. We're drilling approximately 4 holes at that target. We'll have assays out over the next couple of weeks for the drilling that we've done there, along with some drilling that we've done to the west at Neptune, again on our own 100% areas, and they don't look too dissimilar to what we saw at Trafalgar in terms of old workings, copper in rock chips, copper in soil, old spoils. You can see that copper and gold mineralisation run through these deposits. So that magnetic trend running to the north runs up to our deposits at Elaine. So that's a 9.5 million tonne, 1% copper ore body plus 0.3 grams per tonne gold. So this trend is mineralised all the way up there. It's some 14 kilometre stretch. I think it's some great property to be exploring in a base metal province, smelter nearby, a railway out to port, power line running next to the highway. I think it's got a lot of things going for it, and it's an area that really has suffered from, I guess, a lack of attention over the last decade as we're moving into a stronger copper price environment. These are the types of next-tier projects that I think become development targets. I mentioned there those 2 trends. It's a bit hard to make out on the bottom right-hand picture. There's a trend that runs from Trafalgar and Victory to the south. It runs for 14 kilometres up to our deposits at Elaine and Jubilee. I should note that the Jubilee deposit is in a joint venture with Glencore, but there's also a trend that runs out to the west from the Neptune group of prospects all the way up to Blackrock and Sunset. You can see some of the intercepts there at Blackrock and Sunset. Blackrock, quite broad intercepts at sort of 78 metres at 0.5% copper with some gold. And Sunset, bit smaller, 24 metres, but much better grade at 1.4% copper and gold. Those 2 particular prospects don't have resources around them, but have drilling to indicate that we could probably take them up to a resource. So in terms of how we're spending our funds moving forward, they're the types of targets, again, that we'll be looking to drill in the second half of this year and take through into a resource status. Here's a few pictures of what the typical background looks like there. A lot of copper mineralisation on surface and a lot of old-time workings that you can see there. We're drilling 7 targets. Mike before said you've got to drill a lot of targets. You've got to keep everything moving forward and testing a lot of targets to get lucky. We're testing 7 as part of that 4,000 metres that we're drilling currently. That's probably halfway through in terms of the drill progress. Assays are probably 1 to 2 weeks away, I think, with that program continuing to fill our news for the next 6 to 8 weeks, I think. I should very briefly touch on our West Australian gold project because we have spent a lot of time and a lot of focus there in the past 12 months. The project here sits next to the Bronzewing deposit, 3 million ounces historically produced. We're less than 100 metres away from Northern Star's project there. The property hasn't been drill tested below 100 metres of depth. Again, very few properties globally sit next to Tier 1 gold mines that haven't been explored. Another fantastic opportunity for us to test in the second half of this year. So what do I want to get across? We're busy. We're drilling programs here in WA for gold, in Queensland for copper and gold mineralisation. Big systems. We've got a copper inventory already. Copper and gold, no better place to be at the moment as the world moves forward. We've got the right team to be exploring for both of them, and we're well funded to deliver a significant set of news for the coming year. And so I might leave it there. If anyone's got any questions, my email address is in the presentation pack. I welcome anyone to get in touch with me if you can't catch up with me later tonight. But thank you for the opportunity.